Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, March 28th, 2022. And our top story this morning, Turkey reforms its retirement system. Well, joining me now to discuss this and a lot more is Seda Peksidim. She's founder and principal at Pension Research and Consulting. Seda, great to see you. Thanks so much for joining us on the program this morning.
It's a pleasure being here today, Jeff. Thank you so much.
And we love talking about other systems. You know, we can learn a lot here in the States, in the United States, from people like yourself and other global systems. Let's start off with some of the basics. Can you give us the basics, the pillars of the Turkish pension system?
Sure, Jeff. Indeed, Turkish pension system has three classical pillars. The purpose of Pillar 1 is to provide a basic old age income, particularly for the lowest income percentile of the population. And this unfunded public pay-as-you-go component both include flat rate supplementary pension and means-tested income safety net. So in this pillar, the retirement age for women is 58 and for men it's 60. And indeed, I think this is a really important information. The first pillar of the Turkish pension system, Pillar 1, has one of the highest replacement rates among the OECD countries. It's almost a net replacement rate is close to 100%, which means that the ratio of average retiree's salary to a worker's salary is about 1. So moving to the second pillar of our pension system, it has one big mandatory occupational pension plan called OYAK, and it's for military personnel. And the contribution rate is 10% of monthly gross salary of military personnel. And also 50% of OYAK's assets, almost half of its assets, invested into the subsidiaries of OYAK, its own company. And OYAK has a great success investment performance compared to other pension funds, I think. And it has beaten inflation for over the past 10 years with its investment performance. And then when we move on to our third pillar pension system, it's fully funded DC. It consists of fully funded DC pension schemes with voluntary participation. There are currently over 7 million participants in our voluntary components. And indeed, if people want to retire from this system, they need to complete 56 of years of age with 10 years, minimum 10 years coverage periods. And differently from many other countries, in Turkey, portfolio management companies are responsible for the active fund management of our pension funds. So pension companies set up the pension funds, but the fund management, portfolio management companies are responsible for the fund management of these funds. And in 2017, Turkey has introduced auto-enrollment policy. And now there are over 6 million workers in the system from either public and private sector.
Thank you for that, Seda. And I think it's helpful for the audience. Now let's talk about some of these reforms. You mentioned auto-enrollment. Any other reforms? Because when you look around the globe, we have an aging world. I mean, not only are we getting older, but we're not replacing people with other people with the birth rate's very low, I guess is my point. So what reforms are currently taking place in Turkey?
In 2013, Jeff, Turkey introduced government state matching contribution, about 25%. And in Turkey, and also I think in Poland, state has really generous financial incentives for its participants. So in 2017, after that, we introduced auto-enrollment. But three important regulations took place recently in the Turkish pension system, which I really want to mention. First of all, our state matching contribution has been increased from 25% to 30%. Then now, under the age of 18, young people also can enter and join to do our private pension system. Their beneficiaries will be their parents. And finally, pension funds now are traded in a platform called Turkey Electronic Fund Trading Platform now, which increased transparency. And now participants can also buy other mutual funds, pension mutual funds from different pension companies. And this will increase competition among pension companies and pension funds, which will, I think, in turn also reduce some management fees and etc. These types of fees, and to benefit from economies of scale. I think increase diversity, fund diversity, increase transparency, and increase diversity. This regulation is really important.
Yeah, I mean, that seems to be the case, especially here in the States. We have been working hard. There's been a lot of litigation around fees, been working hard to reduce those fees, but also delivering value to shareholders, to participants. All right, let's talk a little about auto enrollment. How does auto enrollment, because that's something we also have here in the States and other countries are doing it, which we'll get into in a minute, but how does the auto enrollment in Turkey, how does that feature work?
Jeff, Turkey introduced auto enrollment in 2017. And before Turkey, indeed, some developed countries also tried this policy tool, and they are really successful, like New Zealand and the UK. They promote pension savings via auto enrollment. Okay, but in Turkey, if we move on to the parameters of auto enrollment, the target population is people from either private or public sector who are under the age of 45. The opt-out window is about 2 months, but after 2 months, also participants can cease their membership in our private pension plan. The employee's default contribution rate is 3% of employee's gross monthly salary. And I think Turkey is an exceptional country in terms of default investment option, because in Turkey, instead of life cycle funds, interest-bearing or interest-free funds are offered as default investment options. And default fund management fee is capped at 0.85% of asset under management. But unfortunately, the opt-out rates are high, like in other emerging market countries who introduced auto enrollment.
Yeah, I was going to ask you about the experience. You mentioned the opt-outs. That's not a great sign, but you have under auto enrollment, at least here in the States, you can opt out. I think it's a lot less. Any reason for the experience of these emerging market countries? Is it just lack of dollars, or lack of funds that people have, or lack of trust? Any thoughts there?
Indeed, when we look at the main reasons why people opt out from the auto enrollment system, I'm speaking for Turkey and some of the recent surveys from other countries. The first reason is lack of affordability and high level of debt and expenses, Jeff. And secondly, of course, I think informality, high level of informality is a really important obstacle to achieve higher coverage rates in auto enrollment systems in emerging market countries. But for example, when we look at the Central Eastern European countries who introduced auto enrollment, for example, in Poland, also opt-out rates are really high, but informality is not so high in those countries compared to Latin American and African ones. But why this is the case? And because I think lack of affordability, as you mentioned, is a really important obstacle, and we need long-term reforms to mitigate this issue. But we can implement auto enrollment policy with other policies, I think, to tackle with this issue and to promote pension savings in also emerging market countries.
Yeah, well, thanks for that, Seda. I need to take a very quick break. When we come back, we'll talk more about auto enrollment, gauging whether it's a success or not a success in Turkey, and more. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're joined this morning by Seda Peksivian. She is founder and principal with Pension Research and Consulting. Seda, thanks so much for sticking with us this morning.
My pleasure, Jeff.
Yeah, it's great to talk. As I said, it's great to have you back on talking about the Turkish pension system and, quite frankly, other pension systems around the world. Let's talk about success. How do you first of all, is the Turkish reform auto-enrollment a success? And how do you gauge success?
Indeed, Jeff, I can define the Turkish auto-enrollment system as a limited success, but it's not only for Turkey, I think, for also other emerging market countries. In the UK and New Zealand, we can define auto-enrollment as an absolute success. But I think in emerging market countries, maybe the opt-outs are really high, ranging from 60 to 70%, but at least we have 40% of people under the private pension plans. So it's always better to introduce auto-enrollment than not to introduce it, in my opinion. It's exactly this case. But we need to complement auto-enrollment with other solutions, with behavioral and technological solutions, I think. So, and I think countries should not mimic the developed countries' parameters of auto-enrollment. They should design their parameters, auto-enrollment parameters, according to their own demographic, financial, and economic structure. This will be my main points for who want to introduce auto-enrollment, like countries Russia, India, and Ireland.
Yeah, and how would you encourage other countries to consider and adopt auto-enrollment? Because there are headwinds, there's concerns like we talked about in the first segment around disposable income, putting pressure on people. Maybe people are not used to it, a high rate of opt-out. But how would you suggest encouraging those countries to pass this type of reform?
Indeed, Jeff, it's certain that, as I mentioned, always better introduce auto-enrollment than not to introduce it. But when we look at the voluntary pension coverage, indeed, very few countries can even reach 60% of coverage rates. And for example, in emerging market countries, as far as I know, only Czech Republic, with the very high state subsidies, can achieve 60% of coverage rates under voluntary pension component. So I think many countries should also and will implement this policy too. But I think it's not alone a lifeboat solution for emerging market countries. Even like Central Eastern European countries, Poland, who have lower informality rates, have lack of affordability problem. So these require long-term reforms. But when we look at the other side of the coin, we need to complement other behavioral and technological solutions to promote pension savings. So I think countries should not look at the auto-enrollment as a lifeboat solution to promote pension savings in their countries.
Yeah, I would tend to agree. It seems to be that you need to take a multi-pronged approach. You can't just rely on one policy or the other. And you seem to indicate, I want to get your thoughts on this. You seem to indicate for other countries considering this type of reform, you're going to need to do a lot more to get people saving. And that includes the technology, that includes policy reform, but also education and communication. I think that that's one that is often missed.
Yes, you are so right. For example, in Italy, differently from other developed countries' experience, the opt-out rate under auto-enrollment is really high. And two main reasons is one of them is lack of trust, and the second one is lack of communication, Jeff. So I think communication campaigns are really important, and we need to implement them effectively before introducing auto-enrollment and other private pension reforms. Because one day people wake up and see that today in private pension plans, oh, they can enter, yes, there are additional state subsidies, but we need to inform them with these communication campaigns before we implement some reforms for them.
Yeah, I completely agree. Just from my perspective, obviously I'm not in those cultures, but I think the better you communicate with people around all these different aspects, why it's important to save, how you can save even if you're not earning a huge income, very important. Seta, we're going to have to leave it there. Really great to talk to you. As always, great analysis, and we look forward to having you back on the program again very soon.
It's my pleasure, Jeff. Thanks for having me.
Thanks, Seta. Great to see you. Thanks for sharing your perspective. That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more in all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives? Check out our latest content. You can check out our website and our streaming partners, Amazon, Roku, Samsung, over 100 more. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
But if you're tired of the same old...
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.